Hello, everyone. Really glad to have you all here. I think this is going to be a very interesting discussion between the tariff situation with Canada and the US. There has been some development, but this particular session tried to kind of steer away a bit about like the diplomatic tension and more and be more focused about like the how manufacturer industrial companies can leverage the challenge that we'll be facing with the tariff to transform this into an opportunity, really. So the goal here is to have like actionable strategies that combine like immediate tariff response and like long-term competitive positioning for all of your businesses. So with this, I have the pleasure of having 3 guests who have direct hands-on experience in navigating these issues with diverse background and experience. So we handpicked them so that we have a good discussion going. So firstly, we have Joël Collin-Demers, Principal Consultant at Pure Procurement, specializing in delivering tailored strategy that optimize procurement performance. He made his mission to empower businesses to achieve sustainable growth through smarter procurement practices using technology. So Joël, thank you for being here. Can you give us like a few words about yourself, Pure Procurement? And
Sure. So yeah, you know, as you mentioned, solo consulting shop based out of Montreal, Canada. Work with clients mostly in the enterprise space, but you know, increasingly of all sizes to help them work on digitalization of their practices, you know, process improvement, skills and capability assessments to make sure that we got the people, process, and technology aspect of things all working together and pulling in the same direction to get you business outcomes at the end of the day. So I'm coming at this problem with that lens, right, of improvement, productivity. You know, how do we keep working towards our long-term objectives, even though we're getting this this context change, so to speak. So that's where I'm coming from.
Perfect. Very glad to have you here. We have also Maxime Turcotte, Director of Corporate Procurement at Can-Am. So Maxime has 10 years of experience in like many fields: automotive, construction, industrial distribution. He's currently serving as the Director of Corporate Procurement at Can-Am. He has extensive experience in both the sales side and the procurement side, so a bit of the two sides of the force here. It allows him to bring like a very unique perspective to the discussion. So Maxime, very glad to have you here. Can you give us like a few words yourself, Can-Am, and I think like you guys are a bit heavily targeted with the tariffs.
Yes, thank you, Yacine. I'm very happy to be here today to share our thoughts and what we are doing related to the tariffs. As an economic and finance enthusiast, I'm really happy to be here. So I'll start to describe what is the Can-Am Group. I'll start with what is not. So we are not the three-wheeler Can-Am Spyder manufacturer. Can-Am Group is more than 60-year old company operating in the construction industries. We are designing, fabricating steel component for the North American industries as joist, structural steel, deck. We also offer drafting services. Can-Am Group has more than 5,100 employees right now, mainly in Canada, in US, in Romania, India, and Philippines, operating 22 plants in Canada and in US.
Fantastic. Thank you, Maxime. And lastly, we have Martin. Lucie, Vice President, Finance and Operation at Tremcar. Martin is a seasoned finance executive with extensive experience in manufacturing, distribution, and retail, both at the national and international level. So he's a strategic accountant and an out-of-the-box thinker, as you will see shortly, with a very pragmatic solution to complicated situation. Martin, really glad to have you here, especially for your finance background. Can you give us a bit of a background on yourself?
Thanks, Yacine. Thank you, everybody, to be there with us this at lunch times. First of all, yes, I'm CPA since 32 years. It's a lot of experience. Life was changed a lot of times since my beginning, but I'm not like the reason we said out of the box thinker, it's more based on, yes, I'm a CPA guys, work with finance and manage finance team and a lot of manufacturing, automotive, enterprise, and if you want in distribution, both in Canada, US, and long story with international company and division out of Canada and US, but out of the box is basically for a lot of Six Sigma, lean manufacturing, supply chain teams, a couple of things like that. Operation, I manage a few shop in Canada here. Tram car, it's a tank trailer and for liquid and bulk transport. Every huge aluminum and stainless steel tanks that you follow on the highway or the road is come from us, or not tram car, but a few ones from the other manufacturing. Tram car, it's 600 employees, Canada and US. 90% of the sales was out of Quebec and out of Canada. Reason why we look a lot about tariff, it's aluminum is buy from US, stainless is buy by US. We had a huge relationship, and I think most people think to tariff, more people have nice solution, and it's a global way to manage that. That's really happy to be with you today.
Perfect. I think we have like solid people around the table. By the way, I'm Yacine, co-founder of Axya. So it's a procurement platform that allow industrial company to manage their communication with supplier at scale. So during this webinar, don't hesitate to ask questions in the chat or like raise your hand. We structured it so that it's an interactive session. So your participation is more than welcome. Like if you have insight, if you have something that you think strongly about, don't hesitate to share it. It will just be useful for everybody. So with that being said, Joël, the floor is yours to set us up for the context.
Beautiful. Thanks, Yacine, and thanks to Martin and Maxime for being here. So just really quickly, agenda, so you know what we're trying to tackle in this 43 minutes or even a bit less than that that's remaining. So a reminder, just so we all start from the same place, how a tariff works, and then we'll go into the context. As Yacine said, we're trying to keep the politics out of it, just to tell you, here are the facts, right? Here's the probable impacts. Here are strategies that you could use to navigate the challenges that will come with tariffs, and then just leave you on a conclusion and a call to action at the end of the presentation. And then when I say examples from businesses, Martin and Maxime will be able to illustrate and or add nuance to the theory that I'll be laying out. So reminder, how a tariff works. All right, let's get straight into it. So country A is selling a product at $100, for example. And in the proposed scenario that we're all familiar with, there's a tariff wall, a 25% tariff wall proposed. And I know it varies based on who you talk to, when you talk to them. I made the comment further down in the presentation that, I read an article where it says the situation is fluid. So there's a lot of uncertainty there, but let's just use for sake of the example, 25%. The importer imports that product, right, through customs in country B. The importer himself has a markup for the services of importing and dealing with the customs and duties. And on top of that, we add that tariff, right? So he has to pay that tariff that goes to the government of country B. So in this case, $25 on the price of the product. And the buyer who's getting that product after it goes through and clears customs is getting the product price from the seller, the importer markup that goes on top of that, the tariff on top of that as well. So he ends up paying something like $140, right, for that product. The $15 doesn't come from anywhere, right? It's just a theoretical markup here, but whatever your importer is charging for the services, you're getting on top of that product price plus the tariff. So you are funding, the importer is funding the government's tariff policy in country B, and the buyer is getting that raw material or semi-finished good input into their process at a much higher price than before the tariff, right? So the payment is required before the goods can clear customs, and each level will decide how much of the tariff they absorb versus how much they pass on to the next person in the chain. What historically has happened is, and we'll get into that in a second, but is, the end consumer ends up getting a much higher price tag for for the product that they're buying from the buyer in this scenario here. And there's an immediate cash flow impact, right? Because that tariff needs to be paid before you can clear customs. So that's how a tariff works. The context here, right? So we've got U.S. proposed tariffs where we've got 25% on all Canadian imports, but only 10% on energy products. I believe there's things around aluminum and steel as well. But essentially, we're looking at the fact that they've been suspended to March 4th. They were supposed to go ahead in February. Now potentially they'll be pushed back again. So that's why I put it in bold at the bottom. Like the situation remains fluid in the sense where there's still a lot of uncertainty in terms of when, what, how those tariffs will be applied. And so you don't need to necessarily latch on to the information here, as it can still change on a day-by-day / hour-by-hour basis. But what Canada has essentially stated as its position is that it will come back with dollar-for-dollar tariffs on about $155 billion worth of American goods, but that's also been suspended pending the U.S. tariffs, right? So Canadian tariffs won't go ahead unless there's U.S. tariffs put in place. And the scale of impact is huge, right? It's over $750 billion, or estimated to be around there, in bilateral trade that could be affected. So that's sort of the context on a trade standpoint. But I also wanted to touch on the productivity standpoint, right? Which is something we hear about a little bit in the news, but a lot less, because we're focused on the details and the changing details of the actual policies themselves. But what it's important to know going into this conversation is that Canadian manufacturing productivity lags the US by about 25%, right? So whenever we look at productivity indicators, which is the output of a country divided by the amount of hours worked, we're about 25% on the Canadian side behind what the US is able to produce. And on this call, just for everybody's knowledge, there's about 80% Canadian people that signed up, and about 10 to 20% US, with a bit of people from other countries as well. So I'll put a bit more emphasis on the Canadian viewpoint as we go through the discussion. So this productivity gap creates additional vulnerability for tariff shock in Canada, right? Because we're less productive, we put less inputs, and this makes productivity improvements even more critical, right? So that's essentially the context. I see that there's a question, I believe, from David.
Oh, yeah. Just to confirm, how do you calculate again the manufacturing productivity? What's the calcul there?
Yeah, so the calculation there is just the total output, right, in dollars, divided by the amount of hours worked to create that output.
Thank you.
No worries. And there'll be some variations depending on, its productivity is calculated by a few different organizations. So depending on if you look at StatsCan or global productivity, it'll be a bit different, because you want to also measure on what they call international dollars, right? So they try to adjust it for different currencies and that sort of thing to try to be able to measure across countries, right? So I'm giving you the simplified version, but if you want to get into it, it gets a lot more crunchy. But essentially, we get to that 25% figure, give or take. Inflation as well, just from a contextual standpoint. So inflation in Canada has come back down to around 1.92%, right? And then the U.S. inflation rate as well has followed a similar pattern, but is still higher than on the Canadian side, around like 2.5%. And we see that. So just as it's important to note as we go into the discussion. So that being said, in terms of the context, what are the probable impacts of these tariffs? So on the immediate financial impact side, so as I mentioned in the reminder on how tariffs work, 25% cost increase on U.S. bound goods, and that could decimate profit margins for many U.S. manufacturers that are buying goods from Canada. And if if Canada puts retaliatory tariffs as well, depending on the categories, well, our inputs on the manufacturer side could also rise by 25% if we're getting those semi-finished goods or raw materials.
Hi there, can I get a medium steep tea double? Thank you.
Oh, somebody's at Tim Hortons. We'll put them on mute though. That's funny. So can you grab the mute on that if you don't mind? That couldn't have been more Canadian. That's hilarious. All right, so where was I here? Okay, yeah. So and there's also the potential of cumulative tariffs, right? For highly integrated sectors, automotive comes to mind. So if I'm going across the border 6 or 7 times in the manufacturing process, then I might get hit potentially multiple times by this tariff until we get to the end product, right? So the specifics there as well, like there are certain duty drawback programs where you're able to say, okay, well, if it's going across the border multiple times for a given product, we are able to negate some of the tariffs there. But the specifics will have to be seen, are yet to be seen. So that's from a financial standpoint. But if we go to the follow-on considerations, there's a lot of contracts that don't necessarily have provisions for such significant tariff changes. So there's a risk there for a lot of folks, right? Because we did not necessarily see this coming, given the historical relationship between the two countries. There's cash flow implications, as I was mentioning. So if you're paying that tariff up front, if there's uncertainty, which some may ask themselves, like, is the uncertainty by design to impact or to slow investments, in certain parts of supply chains? So you want to keep that in mind. There's also, market share dynamics that are going to change as we seek alternatives that may make more sense from a cost perspective on both sides of the border. And the networks become economically unviable, right? So essentially, as a whole, the system is going to behave like water, right? We're going to shift networks, shift supply chains to whatever makes the most sense now, right, from a costing standpoint, and it's going to readjust to the path of least resistance or the path of least cost, right, so that people can remain profitable. And so that's what you need to be thinking of from a systemic standpoint. And the reason I talked about productivity at the front is that the higher productivity level you have, it gives you more options, right? Because you're able to, use that profit margin that you have to take different types of decisions, right? Your back is less against the wall. And the whole takeaway from this, of course, is welcome back inflation, right? So, and not just inflation, but potentially stagflation. So stagflation is where you have inflation, the prices are increasing, but your growth is actually diminishing, right? So you're going into recession because you have less demand for your products, given the higher prices that are forced on you by the tariffs. And so if we get into that situation, that's not super joyful. So that being said, that's what I wanted to talk about, at least from a theoretical standpoint. And on that note, like Martin, I'd turn it over to you, right? Is there anything you'd want to latch onto or give examples to in your day-to-day at Tremcar?
Yes, thanks, Joël. I tried to, how a picture give 1,000 words, it's really easy. I tried to find a nice picture. Last year, before November, we are like a beautiful summer day at the lake or at the beach. GDP growth target to 1.5 for next year. Inflation rate, like Joël tell, 2% before pandemic. Top of the roof at 8 during pandemic, and now soft landing around 2.4 on US. Interest rates going down. Foreign exchange, Canadian dollars, US dollars, 0.75, 1.35, depends on the side of you're looking for. With euro is the same. All foreign exchange look good. Since November, get back to the beach or the summer at the lake. Risk of heavy rain, thunderstorms coming, tariff. What's the impact of tariff? It creates some risk, some turbulence, some instability, some uncertainty. But everybody's going to start, maybe I have a risk. If I have a risk, what I get, I will holding back some order. We'll create some inflation again, or GDP, new forecast for next year is between 0 or -6. Inflation risk rising 2, 3, 4, 5%. Unemployment rate will go up. That's the impact. If you follow a few companies on the Dow Jones, a lot of them have forecasts for next year with lower increase than last year or reduction of sales. Someone raised the hand, said, hey, for the next following quarter or the next semester, I will not follow or share my forecast because I don't know where we are. That's the impact of risk, is create a certain risk or turbulence, and people just go on wait mode, just stop and wait. That's create a second vague of, okay, this is tough, I will be like this, I will wait. And cash is king on life. What's most people do? Try to reduce the investment because they try to go to war. That's the first point. Go, Maxime.
On our side, in the steel industry, we are the lucky one. We won at the tariff lottery, so we might be hit by 2 tariffs. The 25% on all Canadian imports to the US, and also the 232 section is also targeting the steel industry. So on our side, we see a lot of impacts. The first thing, so concerning the 25% that might be applied to all imports to the US, the first impact that we see, except inflation, except the uncertainty and the devaluation of the Canadian dollars, we see some delays at the borders. So for either parts, if you are importing or exporting, since the Canadian will reply dollars for dollars, it's gonna put some stress on the supply chain, and we might return to the fun period like in 2020, 2021, where we had shortage of things that we didn't know that were used to produce our material. So this is the first impact that we are seeing. So we need to be prepared to it. As example, some of the welding wire company are importing Canadian steel to manufacture welding wire in the US, and for Canadian customer, they are exporting back the material to the Canadian side for the customer. It's also, I don't know if a lot of you saw in the news, it's the same things for day-to-day product that we buy. There's not much company that doing aluminum cans in North America. They are more centralized in the US. And since the US government will apply a 25% on aluminum as well, it will affect the price of your Pepsi or of your beer that you're gonna buy. So this will for sure create some inflation. On another aspect, it's hard to be prepared for the counter tariffs, since the government is currently evaluating on which category they're gonna target. So this uncertainty makes us difficult to do some scenarios. Be proactive on this side is kind of hard. So we are targeting or main components or critical supplier, and taking making some strategies to avoid principally some shortage. On another aspect, in each storm there's positive things. So for on our side, for the supply chain, it's helped us to be more present with the sales team, since the customer want to be reassured. The customer wants to know what's going on the procurement side before taking decision to sign a new contract. So we are more and more involved with the sales team to discuss about our strategies related to the tariff.
Yeah, and I think, Maxime, that's a great segue into the next section, right? Which is strategies to navigate these challenges, right? And so I think you mentioned one of them, which is helping the sales team eliminate uncertainty for potential customers or for existing customers by being solid on, in your context, here are the impacts of tariffs, here's what we're doing, and being very clear and concise with your messaging around that to help unlock sales, right? To help quell uncertainty or quell worries from customers in terms of what the impacts are in your specific context. And if we explore a couple more here, right? So on the short-term side, and I believe Martin, you were the one in our prep offline, right, who brought this up, is like short-term, there are quick fixes to buy you some time, right? So you said cash is king, and you want to be able to give yourself as long a runway as possible before feeling the impacts of this. So whether it's stocking up on inventory, doing advanced sales or deliveries to certain customers across the border, either way, while the tariffs are paused, right? And trying to get ahead of this and buying yourself a couple of weeks, a couple of months, or as much as you can, given your context, is something to think about. Making sure you're looking at your contracts review for example, force majeure considerations. Do they fall into? Does this fall into that, right? And how exposed are you from a contractual perspective to these new tariffs? And what options does that give you, or what things do you need to shore up immediately so that you're essentially defining the rules of the game before playing the game? Martin also mentioned cash is king, right? So looking at cash flow management, working capital optimization is something that you should be doing. And another point that Martin, you brought up, which I thought was excellent, is to secure unneeded financing yesterday, right? So as we go into playing this new game, right, with new rules, you may not need financing short term, or you don't think you need it, but you want to give yourself as many tools as possible to be able to weather the storm, right? If we go back to the analogy, so having unneeded financing, access to cash to weather the storm. There might be government programs coming as well, right, which might be funded by tariffs or counter tariffs on the Canadian side, for example. So making sure you're looking at those different tools and having them in your tool belt to weather the storm is important. Accelerated evaluation of domestic sourcing alternatives, right? And that's where something like the Axya manufacturing network is interesting, right? So sometimes we're just using our suppliers because they're the suppliers we're using, right? And we haven't necessarily looked at other sourcing alternatives, and they might exist, right? That would just make sense in the normal course of business to look at. But now that we have this coming or this uncertainty hanging over our heads, like how can I get into a position where I have more certainty? And then also trying to have those discussions, right? Even though you don't have the specifics of what the tariffs are going to be, when they're going to be, the details of how they're going to be applied, having that open line of communications with your customers and or your suppliers to discuss potential scenarios and try to define the rules of the game before the game happens, right? Against, to use that analogy. And I think, Maxime, you had mentioned at some point as well that, like, this isn't the time to retreat from relationships. It's the time to lean into relationships. It's the time to leverage those relationships, right? And the solidity of those, to make sure that you're trying to create win-win outcomes as much as possible, and or lose outcomes, so to speak, right? That you're weathering the storm together with your business partners, which eventually this storm might blow over, right? The sun will come out again. Medium long term, so we focus more on the trade impacts or the trade context that I mentioned at the beginning on the short term, but medium long term, this is where productivity comes into play, right? So reassessing your manufacturing footprint, right? Are there other strategic partnerships or acquisitions that you could make to maintain market access, right? So I give the example of developing dual supply chains, right? So having a US division, a Canadian division, if you don't have one already today, and or looking at, how can we, if we're doing different product lines, are there ways for us to easily like duplicate those product lines if they're only on one side of the border today? Alternative markets as well, right? So there's been lots of talk of looking to Europe. As I said, it's like it's water, right? The whole system will behave like water, right? So if I'm making less profit from selling to the US because I get less demand because of these tariffs. Potentially, you know, the profit margin shrinks, but I'm able to shift that demand or shift that offer to Europe. That's something that will start happening, right? I think there's a question in the chat as well, or yes?
Yep. So we have a question from Jean. So if I would like to import straight from Mexico into Canada, will the fact that crossing the US by truck will mean being hit by the tariffs?
Yeah, I don't have the answer to that question. I know Martin.
I can reply to this one. So no, it won't be hit to the tariff as long as it goes straight from the Mexico to Canada. So it's we have an agreement all between all the countries. So if it's not stopping to US, it won't be hit by traffic.
If I may add to that, I'm sorry, I'm listening in. It has to go in bond with a carrier which has the necessary equipment and paperwork. Then it's tax-free.
Thanks for adding to that. Yeah, so the other things that you can do is looking at your product portfolio, right? Focusing on those high margin products that can absorb tariff costs to some extent. The one I really want to focus on as well is using the tariff threat as a catalyst for overdue modernization, right? So we have this 25% gap productivity on the Canadian side with the US, and even more if you look at certain European countries, right? And so we have to ask ourselves the questions why, right? And is there a reason? Is there a systemic reason why we couldn't be as productive as the US or as certain European countries? And to me, the answer is no, right? Like there's not a lot of it. I think comes down to culture and to potentially resting on our laurels in the past decades because of easy access to the U.S. market, for example. So it's really about thinking about, okay, are there projects that we can do with dual benefit where we have productivity gains, we mitigate the tariffs at the same time, and we also position ourselves better for the future, regardless of where this trade war goes, right? And I alluded to this, but leveraging government support programs for those productivity gains, right? So really having an investment mindset to this and seeing, okay, how can we, if an investment was good yesterday, before this tariff dynamic came into play and was really going to affect your business in a positive way, it still is a good investment today. It might just be a bit different, right? You might need to be more ruthless in terms of the prioritization, right? So making sure that you're investing in programs that have a very high likelihood of ROI and that you can execute on fairly quickly as well. So that being said, I would again, right, turn it over, Martin, Maxime. Maybe Martin, you first, right? Are there things that you would add to this list or things that you're doing in your day-to-day at Tremcar that you'd want to highlight?
For us, it's really easy. We made a huge job on strategic plan a few years ago, and we review every years. And strategic plan is not for the day-to-day plan. It's the long-term vision. It's for the next 3 to 5 years and up. If we have a long-term vision, we know that we have some day-to-day business that you have some effect, but the long-term vision is the good one, because if you work with your SWOT, your strength, you have some opportunity maybe is going on long-term vision. You see what we want to push your organization. Did you need to invest to increase efficiency and productivity? Did you try to find new market, new product? Tariff or the economic situation actually has to review a couple of points like that. I don't know if you remember on your old school program, PESTEL, the geopolitical economic impact on every decision. It's never on actuality, like it's not on the last 10, 20, 25 years. It's not an object. Now it's an object. Every place have to conservative approach, try to protect. Just think in Canada, make some sales from Quebec, Ontario, Alberta, and BC, and New Brunswick is complicated. But with the rest of the world, it's like that. If you get back to I think short-term vision, like Joël said, yes, cash is king. Cash is king, whatever it's take. But where you are good on your product, your customer, your supplier, keep relationship with these people on all your supplier, all people in your supply chain. Talk to them. Be sure contract is safe. Link is good. Delivery will come in. For customer is the same. Your order is confirmed. It will be shipped like it's supposed at the date you suppose. You're okay to receive at this time. Can we make some tactical works to send you before beginning of tariff or a couple of things like that? The other thing I hope, and I really hope that your management teams make some scenario, what if scenario. Okay, if sales was decreased by this, whose market we need to lose, whose one we need to win again or increase. Remember the old cash cow, who's your good product that generated some cash, who's the loss leader that we need them, but it's a higher cost of margin because maybe we have price reduction to absorb a couple of tariffs. Who's your good margin? What is your marginal contribution by product? Did you know your fixed cost? Did you know your variable cost? Did you know your real cost? There are a lot of people have costing that is a general vision. Did you have a specific one? You have nice margin and the other one was losing margin. Like Maxime told a few minutes before, it's need to go more closely with the sales department to talk with them to secure some customer. But if you have a nice vision of your margin, your cost, did you know your break-even point? That it's really important. And whatever it's take when you across a storm, it's to have financial resource. Cash is king. How can you protect your cash? You want to import something like Maxime said, you buy some aluminum or stainless or few components from other parts, you have counter tariff or tariff. How can you protect your resource? Did you talk to your banker in the last few days or few weeks? Did you have nice relationship? Did you have on your loan, did you have some opening stuff that maybe you will focus to securize your cash? Keep your cash close to you to be sure that you are able to continue the process. And if your long-time vision is to invest on your floor, on your shop, on your tools to work, office or production, to increase the efficiency, productivity, you will just reduce the cost. Keep your long-time vision, and I think is the best way to go out of this. And cash is king. Two things to remember: cash is king. Stick to your plan.
Yeah, and I think you can also execute on parts of your plan where, I like to have the self-funded mindset, right? Can I invest in a project to make us more productive? It's gonna liberate cash as well, right? Like the ones that are gonna generate cash flow to some extent, right? So having that mindset of how do I put those two things together that you mentioned, Martin, is definitely useful. I see the time running here. We got about 7 minutes left, but I know, Yacine, we had a question in the chat, and then we'll get to
Maxime. We have a question. But just before that, Martin, I like this thought of having a good visual about what's going on in your business. Like understanding the variables is critical here. Okay, so the question is, are intercompany transfer exempt from tariff? I believe here it's like Canada, US, or something like that.
I think Martin was saying no with his head. I don't have that answer to that.
Yes, no, it's intercompany. It's like outside, you across the border, you find the new rules and you play with the new rules. We don't have exemption. Just take care. I don't know for someone if you remember, but old times before a few agreement of free trade, you have some duty drawback sometimes. We don't know what's happened with duty drawback. Actually, it's stuck, but no fact, no issue, no communication. But duty drawback sometimes is the key to manage that.
I would say assume the worst case scenario in your planning, and then you might be surprised, right? Maxime, did you want to add a couple thoughts here on the strategies to navigate challenges in our final minutes?
Yeah, for sure. So the strategy started as soon as we noticed that they might have some tariffs coming. So the first parts that we did is to organize and clean the data. So as Martin said, you need clean data. You need to know what's going on in your business before to strategize or do some scenarios. On our side, since Can-Am growth through acquisition, it's been really hard because we are running with 3 or 4 ERPs. So we following the cleaning of the data, we spot what are critical parts, what are critical suppliers, and we are currently reviewing all the contracts. If we, as example, we review what is the Incoterm contracted with the suppliers. If there is any way that the supplier could maybe cancel a contract to close in the contract. And on our side, our strategy is to work with our current supplier. So same things. It's a storm. We don't know how long it's gonna take to pass through the storm. But if we have good supplier, good partners, we have contract with those suppliers. We want to continue doing business with those suppliers. So the first step is to take this opportunity, sit with your critical supplier, your partners, and find a way to navigate this storm together and mitigate the risk for both parties. Another opportunity that we had, since steel is really targeted by the tariff, we have a seat in the Canadian Steel Producer Association, which currently are working with the government on the reply of those tariffs. So this is helping us to be ahead to strategize following what's coming on the Canadian part as well. And what we are seeing, what we see coming in the market on our side, we think that the Canadian government will increase may put some tariff on a product manufactured from outside of US as well. As example, if the steel industry is really impacted by the US tariff, we are seeing the Canadian government that may apply some tariff from import steel as well. That could increase the price of the steel. That could create inflation. So we are seeing this coming as well and trying to prepare ourselves against it.
Thanks, Maxime. I really liked the point you made around, getting a seat at the table, so to speak, with your associations. I think it is the time to engage, to mobilize, to organize, and then it's a time for creativity, right, as well. And I think that leads greatly into the conclusion, which is that if tariffs go ahead, because as we've been saying in the chat here, it's fluid, roll my eyes in the sense that there is no certainty. And to some extent, I believe the uncertainty is by design. So it's meant to paralyze you. And so, you want to try to write the rules of the game before playing, even if you have uncertainty around the game that you will play, but to give yourself as many tools as possible and to be first before the rush, right? Because as the rules are defined, then people will start to react. And if you've been proactive about it, then you're more likely to get access to more tools than people who are on the late adoption curve, right? Keep thinking long term, which I believe, Martin, right, is one of your main points. I would add to that, have a bias for action. So waiting is a bad strategy. Wait and see is a bad strategy, right? So it's more, okay, how do we think this might impact us? How do we scenario plan? What data do we need to take to have different decisions, different plans? The plans might end up being thrown to the garbage based on what actually comes out and when it comes out, or if it comes out. But as the old quote goes, I think it's an Eisenhower quote, is like plans mean nothing, but planning is everything. So in the planning exercise, your executive teams, your management teams will be aligned on the factors and the variables that are important. And so when it is time to take action, you are all aligned on what is important, and you're able to react quickly, which is the value of planning. I would use this as a wake-up call on both sides of the border, right, for long overdue changes from a productivity standpoint, right? So if you've been kicking the can down the road on certain enhancements or continuous improvement projects because of just not as important as the urgency, something that's urgent in the moment, it's time to look at, right, what is important but less urgent, and tackle that, because it needs to be structural changes that will give you an advantage long term. And we should turn, at least on the Canadian side, and I'll allow myself this comment given most of the audience is from Canada, to turn your productivity weakness into an advantage, right? If you have that 25% buffer, right, in terms of the productivity with the US on the manufacturing side, it means that it can be closed, right? We have the technology available. We have everything that's available at our disposal to create, to close that 25% gap. Whereas if on the US side, you need to be 25% more productive than you are today, then that's a bigger ask. So clearly there's room to absorb that shock by increasing productivity. And so you should be looking at this, at turning this threat into an opportunity in your business. And with that, I know we're a minute over. So if we tried to answer questions in the chat or as we were going here. So thank you very much for coming on. Martin, Maxime, Yacine as well, right? So thanks so much for being here. I hope this was useful. Hope you got a couple actionable nuggets that you can act on in your business. And if there are any additional questions, right, we can stay a little bit, at least I can speak for me. I don't know for Martin, Maxime, but I can certainly ask more questions or answer more questions, I should say.
Yeah, don't hesitate, everybody. And we're going to send the recording after that. So there was one question that was not answered. So any more info on melt and pour product from US and how tariff will apply? Maxime, Martin, Joël, do you know?
Too specific for me.
That's very specific.
Yeah. So the question is about the imports, right?
So melt and pour products from the US being imported into Canada.
Yeah. Actually, we don't know what's going to be the reply from the Canadian government. So it's really too early to tell what's going to be the impact.
I think the answer to that is try to stay tuned. Stay tuned to that specific sector. So I think, I'm happy in the chat. People have found it useful and productive. So unless there are any more questions, if you have one, just raise your hand. We'll end the session here. Joachim?
Yeah, I have one question, which is really all up front on my mind. We have done a lot of work to mitigate on the material side as much as possible tariff impact, and well, I think we're succeeding as well on the materials, but we have a lot of material which goes back and forth, rolls of paper which cross the border to be converted in both directions. And what bugs us and what is a big concern to us with all the tariffs Trump announces, including the reciprocal tariffs, does anybody have any intelligence how on earth they're going to administer that? Because, at the same time, they're firing tons of people and nobody knows how this is going to be administered. And in the worst case scenario, we would have very long lines of trucks at the border which can't cross the border because nobody can administer these tariffs. Is there any intelligence out there?
I don't personally know of any, but I think the image is strong, right? It's like we have this machine that's integrated between the US and Canada, and we're essentially like putting a wrench in it, right? And having it jam, and then everybody going to figure out how they need to fix that, right? So I don't think, unless Martin, Maxime, you have visibility into intelligence.
To answer your question, Joachim, I will not the perfect expert but we're looking because we have the same as the QTEL. Actually, don't have any news about this. But if remember, if we go back in 2018, 19, 20, you have the first tariff. Did you remember? You have some duty drawback for you pay at the end only the final added value. If you take a part from one country to the other ones, you just add the added value when she's get back to the original country.
Right.
It's worked like this at the first wave. And if we go under before the whole free trade, when you have some tariff on some stuff, but is work with duty drawbacks. But actually, no rules was no. If you have, I don't see it. We're looking for, but nothing was announced. We don't know the counter tariff. We don't know the rules.
Yeah,
but it might be useful to that point, as you know, we were saying planning is everything, right? So it might be useful to look at that history, Martin, right? Just to understand how it worked, because it might be the blueprint or at least the starting point for how something might work going forward, right?
Yeah,
That's
but
a good
it's
point.
hard to take decision on historical point, like the
Agreed.
Section 232 in 2018. It was not including finished goods, so it's kind of new. So we are all in the same situation, waiting and trying to strategize, but still waiting for the final print of all those tariffs, and if they're gonna all arrive, it's also an uncertainty. So we are all in the same boat.
Thank you.
Just one thing on that. Be sure your HS code is perfect. You have more. It will be more easy after to manage everything related to that. Nice HS code, nice. Your partner to across duty will know quickly what's happened with this.
That's a great, I think I would end there, right? Because that's a great, like, another actionable piece of insight is like, you know, we talked high level about, you know, making sure your data is good and having access to those accounting numbers, right, on variable costs, fixed costs, etc. But the master data on your HS codes for products that go across the border, that's a relatively easy action to take now that, you know, regardless of the uncertainty, will put you in a better position when the rules do come out, right? So if there's an analyst sitting around wondering what to do, you give them all the HS codes to review, right? Great. All right. Well, thank you very much, everybody, for attending. Somebody asked in the chat if I would mind sharing the PowerPoint. I don't, so I'll give it to Yacine and Elsa to share with the group. And yeah, I'm glad everything was useful and you appreciated the session. And feel free to reach out to anybody on the call if you have any specifics that you want to discuss going forward. So have a great rest of your day, guys. Keep your stick on the ice, so to speak.
Thank you. Have a good day. Bye-bye.
All right. Bye-bye.
Thank you. Bye.